All right. I actually have no idea what the sound sounds like right now. Oh shit. Let me do these audio settings. If you can hear me, let me know. I totally just didn't set up the audio. Mic check, mic check. Can you hear me? Let me test something out real quick. Anyone can hear me. Oh shit. How do I turn? Damn. Change one more thing. Okay. We should be good to go. If you have any problems with like the audio or you can't hear me or whatever, just let me know. Say something. Um, yeah, my bad. When you see the screen kind of flutter like that, I'm doing something. But all right, so this is where we're at. I got like a little half and half index of Bitfinex and Binance here. Um, yeah, let's see. I'm gonna go ahead and use this order block, this bullish order block. I know a lot of people are using this one because it's closer. I, I I don't know. I just want to use this one. I really have no reason. It's just further back, and it's been more faithful, so that's why I'm gonna use it. Um, and I'll use the body of the candle. I probably should use the whole thing, but make this red because right now it's bullish, and then it really flipped bearish. Um, yeah. I mean, so this is where we're at. We're at a historical resistance where this resistance, let's see, has held one. Oh shit. Why is that not working? Why is it giving me the flat? All right, one, two, about three times. Okay. Um. Well, actually, it's only held successfully twice, and now we're on the third. We're on the third go around. And so we're gonna see if this is a good area to short. Um, I'm short right now, pretty much at break even right now, just because. I mean, this is just a high probability play. This daily candle to me does not inspire confidence. Approaching resistance. Uh, this is this is what I want to see, right? We're approaching resistance. I want to see a lot of bullish momentum push through it because I mean that's what it takes to break a resistance. You don't kind of like timidly break resistances. Um, and this is just really not what I get from this right here. Additionally, the volume is just below the moving average, where here approaching resistance on the volume was above the moving average, and so small candle spreads, low volume doesn't indicate a lot of buyers are just ready to go right now. But if we do break up, I would expect to see something like this, and this is something I tweeted out where we were going sideways for about a week. Um, and before the break up, we had this quick move down, and actually, it's not even that move. You can see it better on the 4 hour. This move. So I was pointing at this one, but this one really, where it'll be very quick on the 4 hour, right before a major pump, and it'll just boom, shoot down. Um, it did this on low volume and then massive pump. So if we do pump, I'm expecting some type of quick shakeout where we have a very quick but decently sized spread down candle, take out stops, long stops that are probably right here, and then pump through it. A lot of people are saying this is bullish, which I mean it could be. We could easily just, we're kind of, we're just kind of like flirting with this top and then, you know, explode through it. That was an indicator saying that it'll take this long. But just this type of price action, I personally would like to see some type of pullback first, because it just doesn't seem like there's buyers coming into the market right here. And then this dynamic is never good. Where you see that, that's just not that's not the move. And then here, same thing, bearish divergence. Um, Another thing I tweeted out, I'm not sure how much I want to take the volume right here into consideration, just because this was the pump that happened when BitMEX went offline. Some clear manipulative bullshit going on. Somebody just wanted to pump it literally down to the minute BitMEX went offline, but nevertheless, the volume is volume. There was some volume here, and it is less than the volume here. And again, this daily candle does not inspire confidence, in my opinion. I would like to go long, and let's see if I can find it here. So we broke the range. I would like to go long here, anywhere in between where we see the 12 and 26 EMAs, just because I don't know, that's just a good place to put bids. Oh shit, I think we're going for it, or we might be going for it. Let me not even say we're going for it, because we have to clear these wicks. But it looks like we kind of tapped the 4-hour 200 EMA. There's some type of bullishness going on here. Again, this does not inspire confidence at all. But something's going on. The first 10 minutes of this candle we're pumping. But, and looking at the 12 and 26 EMAs on the 1 hour, great place to go long if you're going to put a stop under here. And if you're of the persuasion that wants to look at price like this, with this type of triangle consolidation, and this would be a breakout, this is like the easiest trade in the world for you. But for the 4 hour, I personally would like more of a pullback where we test this range high, and would like to go long somewhere in here. That's just me. Let's see. So it looks like we're flirting with the 4-hour 200 EMA. Let's see what the 12-hour is. Twelve hours about at 7.1, which is a very common target for a lot of people, because what they're doing, put a marker there, because what they're looking at right here are these swing highs, and you see they're expecting price to attack here and take out stops, and then this pump right here would fuck up shorts and short squeeze us up here. And so that's the narrative a lot of people are going with. Because so many people are going with that narrative, I'm cautious, but I'm not going to say that doesn't make sense. It makes perfect sense. Push up here, fuck up shorts, and take out some short, stops right here, and then form a higher low, or a lower high, excuse me, literally anywhere right here. And if we form a lower high anywhere in here, then the bear market stays intact. Of course, breaking the high here at 64 or 84.96 creates a bullish, or more of a bullish sentiment, where we finally clear one of the highs, and this makes our first higher high. A pump here for sure, would be the first higher low, with the low, let me see, with the low here at 75 or 57.52, and then this low, you see how the marker hasn't printed yet, just because like we technically haven't left this area. This could just be a little pullback before we break that low. But if it does print, it'll be at 58.69. Oh shit, we're at these 3 days resistances. Let me see. They don't historically mean anything. Kind of pumping above the daily too. Might get something like this. Excuse me. But yeah, so that would be our first higher low if we end up pumping here, which would be huge as far as the bear market is concerned. Let us see what else is important here that is noteworthy. We should talk about, what should we talk about? I guess if you want to look at fibs, 50% fib, of course, this 7.1 to 7.2 range seems to be the target for longs, like for sure. I'm not going to go over this because I posted on my personal Twitter, but Ichimoku Cloud is giving targets for there. That's the 50% retracement. That's where those swing highs were that we just talked about. What was the other thing that we mentioned? The 12-hour 200 EMA was around 7.1, 7.2. Oh man, it's trading. Yeah, here. So I mean, this is for sure what everybody and their mom is looking for as far as a target is concerned. About this 7.15 range. So keep that in mind. I guess we've only talked about bullish scenarios. So let me talk about the bearish ones. I'm only talking about the bullish ones, so willingly, just because like alts are pumping, or if they're not, they're starting to pump, or they're making higher lows. Market looks pretty decent right now. The question is this a relief rally or are alts actually moving? Oh, let me put support here. I didn't put support here. This 4-hour block right here. It happened on June 24th, if you wanted to know. There, that's support. Okay, damn, you see how perfect, damn, came right in here. Okay, cool. Bear scenarios, people are comparing this fractal with this fractal. I see it a lot, and it makes a lot of sense. Just because, I mean, it did the same thing. You had this right here with this bullish volume div here, bullish volume div here. It created this very weak kind of trailing up, almost bear flag type of pattern. I'm not even gonna say almost. I mean, it was very much. Well, I mean, it depends how you draw a flag. People get kind of weird with it. Let's look at this. So you had this. Some type of flag right there. Fuck. Magnet mode strikes again. Yeah, so you had this thing clearly broke, clearly caused more downside. I don't know if we ever hit this flagpole target. Probably not. No, we most certainly did not. But I'm sure you could get some fib targets from that. And I mean, this is a very similar thing where you have this here, and then this. me actually just take this just so I know it's, oh fuck, what I do? Let me take this just so I know it's parallel. Ugh, I guess you're not gonna get a perfectly parallel. Oh yeah, something like that. So I mean, yeah, this is the bear scenario that we're in, some type of flagging right into a key resistance level. These fractals just look so similar after a lower high, bear flag into it. There was resistance here. Even just looking at the volume profile of these two areas was so similar because you had this huge low volume node here, and price just, of course, wasn't going to shoot this gap and dump. And then here, again, another just low volume node here. And the question is price going to shoot this gap or is it just going to dump? So, and of course, the consolidation is near the flag, or the point of control is near the flag. I mean, it's just, yeah. So that's the bear scenario. Targets for this. Let's look and see. Somewhere around 5.5 to 5.2. I'm just taking the fib extensions. I'm not getting too fancy with it. I could try and pull out some Wyckoff like calculations, but just fibs will do. So that's what that's looking like. Let's see. Yeah, looking at this again. Oh wow, oops. Looking at the Wyckoff, looking at the range. So okay, so this is important. This is important. This is important, and this is objective analysis right here. And we're at the 4. Okay, cool. Let me get rid of these oscillators. Even though you see the stochastic RSI looking like it's topped out, it might start oscillating downwards. But anyway, in accumulation situations, the breakout of resistance is coupled with high volume. Now, I'm not saying that we will not pump from right here. We could totally pump right here. But what I am saying is that look at this breakout. This is literally what they teach you to look out for in distribution patterns, breakouts of the range on low volume, because that's indicative of trying to trap longs who see a breakout of a major or a key level. I'm not gonna say a major level, a key level, and then drag them in and then dump and then trap them and fuck them up, right? That this like the key, because they want people to buy because they're trying to sell, right? And when I say they, I'm talking about institutional investors, smart money, traders who just know what the fuck they're doing, like, and have a lot of capital, et cetera, et cetera. The people you're trading against, right? That's who I mean by they, and who have a lot more to lose than you as a retail trader. That's what they want. They want to sell at as high as a price as they can for a given range. Given the range, guess where the highest price is? Up here. And so they're going to try and sell to you, right? And the reason the volume is low is because the people with a lot of money, where the volume is going to spike, aren't doing the buying. It's the retail traders with a little bit of money who are doing the buying. And that's why the volume is low, because it's not genuine buying by the market at large and by people with deep pockets. And so you get this breakout on low volume. You start to see upper wicks indicating that the price was being pushed up here. People bought these wicks, right? Keep that in mind. People bought these wicks. They're trapped, et cetera, et cetera. And so that is one thing I will take into consideration with the bearish scenario, that the dumps for this range, granted it was at the beginning of it, came on pretty good volume, right? All these large volume spikes right here, at least on Bitfinex, have been on down candles, and all the up moves have not shown real buying, except for the MEX offline pump. That's what I'm calling it. Oops, that's good, bro. And so that is very valid as far as a bearish scenario is concerned. And if you want to take a fib from here to here, flirting with the 71, it's not an actual fib. That's just a retracement level, but it's something that me and my friends use often, and we find that for some reason Bitcoin and crypto have a very nice relationship with the 71% retracement. But yeah, so I mean, this is where we're at right now, so I'd keep that in mind. For sure. And of course, this possibility of this being some type of bearish volume divergence, pretty much natural or logical corollary of what we just said with the volume. Relating this price action to this previous fractal that we were trying to relate it to before. Where was it? Was it here? Which fractal was it, y'all? This one, I think. Very similar. It actually shows up on BitMEX better, just because it was more volume. But yeah, just looking at like similar highs with decreasing volume, almost for sure easy short every single fucking time. And it doesn't look like that on BitMEX, but I mean, of course, BitMEX was offline during this time, but kind of similar. So that's the bearish scenario, and we're paying attention to that. Let us just get rid of the bear flags. Let's look and see if there's any significant divergences on any of the oscillators that we like. So I like to get divergences on 3 of a number of oscillators. Oh, we'll use the Guppy too in a little bit. I like to use Cripps wave trend, Bollinger Band %B, RSI, stochastic RSI, the ultimate oscillator. Crypt actually has a logarithmic ultimate oscillator. I might be running out of space here. And I don't chart like this either. This is, I ran out. Let's see. Oh, well, I guess I already looked at. Yeah, okay, never mind. Yeah, I don't chart like this. This is literally just like, okay, let me go in and check and see if there's any divs on common oscillators or a lot of oscillators. Of course, we turn the price to a line. We have the source set to close, because if you look over here on all of our oscillators, they're based off the closes. So do not pay attention to the wicks, because your oscillators are not paying attention to the wicks. And the ultimate oscillator is actually a pretty cool thing you should look at. It's basically calculated using 3 different time frames, and then it does some math, which you can look in the source code and figure out. So the first thing you want to do, because this will never change, is look at the closes, and you see we have a higher close right here on price. Let's just make that a nice thick line. Cool. And we'll make it red because we're looking for bearish divergences, because we're connecting highs, not lows. So we got a higher close, and if this closes up here, it'll be even higher. So that's what we're looking at. So we do not get a divergence on Cripps wave trend, because it is also making a higher high into quote unquote oversold territory. Bollinger Band %B is making a lower high, so this is a bearish divergence. and it is of a decent length because Bollinger Band percent B is calculated using 20, and this line is 21. I mean, you could easily just put it here, 20. I mean, it's the lower high. If you change this to 21, I mean, it would look almost the same, right? So if you ever want to just verify if your div kind of stretches out really far, go ahead and just change the pricing. So okay, that's one. Let's see, RSI, same thing. We have a div here. RSI is actually calculated on 14 period. This line, as we just found out, is about 20 to 22. If we change our RSI to 22, I mean, div is still there. So I'm gonna go ahead and change it back to 14 and just leave it there because we've already went ahead and validated that it exists even on 22. So that's 2 out of 3 so far. Stochastic RSI, we do not have a div. Stochastic RSI and wave trend operate very similarly, but you see we're looking like we're about to get a bearish cross here, so we'll see how that works. Something I do want to point out is the 4 hours RSI is at 64, and stochastic RSI is an indicator of RSI. And so since stochastic RSI is above 80 into this quote unquote, you can't see me, but I'm doing air quotes right now, overbought territory, that means that RSI is bullish. And so for RSI to be above 50, above 60, and for its indicator to be bullish, lets you know the momentum of price is bullish right now. But we have this div on it. So we'll see how that works out. So 2 out of our 4 indicators show bearish divergences. One of them does not. And then lastly, looking at ultimate oscillator. Boom. Ooh, that's it's kind of hard to tell because it is a lower one here, but not here. And it kind of cuts through right here. I'll say it's inconclusive. But if you just want to look at this high, and so we'll actually mark that out with purple. Here we have a lower or a higher high here, but on the ultimate oscillator, we actually have a lower high, even though on price we have a higher high. And so I mean that's a div. It's showing, and notice how price is still like trailing up even though it closed here. That's because divergences don't stop price on a dime. They just show the underlying strength. And so we see we're here towards the top of the B bands, definitely towards the top of the 1 hour B bands, and failing to push above it. B bands are compressed, letting us know a quick move is about to come. And we have divs on bearish divergences on 3 out of 4 of our oscillators. This isn't necessarily saying short. You could totally short this. You could totally short this right here. You could literally just market short, put a stop well or decently below 3% above this wick, and target some meaningful area within this consolidation range, even the bottom of the range. If you're aggressive, your short would look like this. But although this is not necessarily saying to short, this is most certainly saying do not buy resistance, buy support, sell resistance. So that's the bullish scenario, that's the bearish scenarios. I guess the last thing I did want to talk about, and I'll recap at the end just in case. The last thing I did want to talk about is the Guppy, or I guess we can look at the B bands. So the daily B bands are squeezing. We're actually at the top, so we might squeeze down. Again, looking at this fractal right here, we squeeze towards the end of this bear flag, and once we got to about the medium, push down. So I mean, we might squeeze the B bands until we get to the top of the upper band and then push down. Very plausible. Looking at the weekly bands, we're looking at making the next lower high maybe around 7.4. Totally possible. run into this block right here, this weekly block. And the last thing I want to look at was the guppy before we do the recap. Looking at the daily, we're in prime bear territory where, I mean, a compression or expansion down would be extremely bearish. It would most certainly take out this support right here. And that's basically how the guppy works. It's the same way the Bollinger Bands do. Periods of expansion and compression. And so the guppy will compress right here with the slow EMAs and expand downwards, or the fast EMAs, excuse me. And the slow EMAs will tell you the direction of the trend. So here, direction of the trend, red, bearish, compression, get ready to short, short. Same thing here. Trend, red, bearish, compression, get ready to short. And then, I mean, we'll see how that works. 12 hour, whew, right at the top of the guppy. We might actually flip it bullish if we find support here near the top of the range, and we pull back down here to this cluster of EMAs. 4 hour actually just flipped bullish with good, or at least on the fast EMAs. The slow EMAs have not. With decent support here. Notice that on the 4 hour, this may not last forever. Here's a good example of flipping bullish and then breaking down. And I'm sure you could find that in other places where we go sideways. And that's pretty much it. So the recap, bullish scenario, or we take out this swing high here at about 7.15. If you look at my personal Twitter, I'll go ahead and put that in the thing. Actually, no, I'm not. I'm just gonna retweet it from Valerian chart so y'all can see it. But personal Twitter, put Ichimoku clouds are putting long targets here. The 12-hour 200 EMA is here. Swing high is here. 50% retracement is here of this move. And so a lot of confluence saying 7.156. Somewhere between 7.1 and 7.2 is a good area to target for your longs. That's the bullish scenario. The bearish scenario is that we have volume divergences here on the breakout of this range. We're not seeing the volume that we want to see. We saw divs on 3 out of 5 of our oscillators. We saw divs on BBM%D, which was literally only made for divs, on RSI, which shows you the relative strength of price, and on the ultimate oscillator, which is another momentum oscillator trying to show you the strength of price, but calculated differently. We did not see divs on wave trend or stochastic RSI. But we also noted that those tend to behave the same way. Not that we're going to discredit the fact that there aren't divs there, but we are going to keep note that that's essentially like taking the, a sample of one thing, like 2 samples of one thing, and then saying that you have 2 different things. So you have one thing. But yeah, price divergences, volume divergences, similar fractal to this one over here looking like a bear flag. And that's the bear scenario. I think that's all there is to it. Oh, the other thing with the bullish scenario is that a lot of shorts are trapped. We can actually take a quick look at that. So here, Bitfinex shorts. And I'll tell you my grievance with this. So we see shorts, of course, are increasing as prices going down. Makes sense. Here's the relative bottom, and then look at all these shorts right here. So basically, everything that started from right here up until current price. So that's about 11,000. Wait, is it this number or this number? What is this price? Oh my god, I can't see it. So from about 26K to about 35.7K. So about 9,756 Bitcoin worth of short positions are trapped underwater. That's what this means. Please correct me if I'm wrong. If you're reading this, you know better than me. To my understanding, these numbers are the amount of Bitcoin that are in this position. So for a short, that means there's 35.79 thousand Bitcoin in short positions right now. But essentially, everything, all these shorts are trapped underwater from this consolidation range. And so the bullish scenario is assuming, right? And I think that's very important to understand. It's operating under the assumption that this is a lot and that a push up will force these shorts to cover and bring this back down to levels around here, or maybe even lower, around here. And that methodology, or that ideology, excuse me, is the same, is assuming that shorts here are the same as shorts here. So here, this was entirely too many shorts, and of course we pushed up and stopped a lot of them out. And so the same thing would be here. This is entirely too many shorts, so we're going to push up and stop a lot of them out. So that's what people are looking at as far as the short squeeze. My two grievances with that is, one, everybody in the fucking mob is talking about this short squeeze right now. And the thing is, when too many people are looking at the same thing, it tends to not happen. And so since retail traders learned from this short squeeze, it's now everybody's like, oh, I'm going to buy, I'm super bullish here. Short squeeze. Exact same thing is happening. That makes me less inclined to believe that it's going to happen again, even though it totally could. Again, TA is not about predicting the future. But it makes me, a little cautious because everybody's looking at the short squeeze. And the second flaw with this logic is that you're operating under the assumption that the market conditions here are the same as the market conditions here. So for here, this many shorts was too much, and that's what forced the market, or made the market force these shorts to cover. That's not, that you can't really say these shorts are too much for current price. And the reason I'll say that is, let me damn, I'm trying to find it. Volume is a big thing here. BitMEX started breaking record levels of volume here, which forced this pump. And so volume again is very high over here too, because I mean it's the same market. Where the volume right here was not the same as the volume right here. These shorts are not the same as these shorts. I'm not going to say they won't get stopped out. These shorts could totally get fucked tomorrow. But what I am saying is that you shouldn't operate under the assumption that the same crypto market that existed in April is the one that exists now in August. That's all I'm saying. So that's all I have. Appreciate y'all, man, and I'll see you all later. Take care.